Hello, in this video, we're going to look at this tax return for a company from a strategic advice point of view. We're going to be looking at red flags that address piercing the corporate veil, red flags that might be associated with IRS issues, and red flags that look at things that are related to ongoing concern. Okay, the first thing that we are going to look at is address change. If there was an address change, that needs to be documented. For a corporation, there's usually a resolution in the corporate minutes. The next thing is we just want to look at the gross receipts. It shows $1.2 million. We're also going to look at cost of goods sold. That's $200,000. I just want to kind of put a pin in this because I don't know if that cost of goods sold percentage is really in line with the industry or if that's something that's going to cue the IRS up for an audit. The next item is interest income, okay? And it shows 0. I want to think about that as we go on. Compensation of officers, 0 for a C corporation or an S corporation. This is a red flag for the IRS to have 0 in compensation of officers. I'm just going to make a quick note that salaries and wages are $360,000, rents $36,000. Interest expense, 0. I'm going to go ahead and review that again as I get to Schedule L. Advertising, 0. That's a red flag just from the standpoint of ongoing concern, as is line 24, employee benefits program. I get down here to line 30 and it shows taxable income of $400,000. Just putting those things into the back of my mind at this point. Signature of the officer and title. Be sure that these are accurate. I have seen a return where the company secretary signed the return, which they may have been authorized to do. However, they signed it with the title of president. So just make sure that it's consistent with the correct officer and correct title. And I prefer to have it documented that they were in fact either the tax matters partner or an officer of the corporation. Okay, I went ahead and scrolled down to Schedule K, and I see that this is a company that uses cash as the accounting method. Also, the business activity code is 812112 with the activity of beauty salon and hairdressing. Now, in about 10 years of reviewing tax returns like this, I have found that there is about 20 to 30% of the returns that really don't have the correct business activity code. Now, this could happen because those activity codes change, but it's more likely that the small business changed its operation at a fundamental level. It could also be that the preceding tax preparer didn't really understand the business or didn't go into depth to research it. Well, let's just take a minute right now and look at some resources for finding the correct business activity code, also called NAICS code. Just go to Google and type in census, NAICS, and that is pronounced NAICS. Click on the link. And in 2012 NAICS search, type in beauty salon or whatever industry that entity that you're reviewing the return on is involved with. There comes up to one is construction. That's not the case for this entity. And the other is beauty salons, 812112. I'm going to go ahead and click it because I want to go down a little deeper and verify in the descriptions. including the corresponding index entries. This is exactly what this company does. They are a beauty salon. So I feel confident now that this is the correct NAICS code. Okay, I've scrolled down to Schedule L, and I'm looking at this, and I see that on line 1, cash went from 100,000 down to 20,000. This is a concern. This could be something that pierces the corporate veil or is just an ongoing concern issue, because if you look at salaries and wages at 360,000 a year, and you break that down into monthly payments, you get 30,000. Well, 30,000 to cover compensation on a monthly basis and 20,000 in the bank just doesn't add up. The next aspect is inventories. Inventories went from 300,000 at the beginning of the year to 300,000 at the end of the tax year. This is a red flag. It really looks like the company's not really tracking their inventory, yet they're posting it. There's another aspect related here. Should this company even be tracking inventories? It said that it was on the cash method of accounting, and so now a little bit of research is needed, because if it's tracking inventories, it probably should be on accrual. However, there are exceptions. So let's take a look at that and do a little bit of research. Go to Google search, type in NTIS tax map. Then click the link that says taxmap.ntis.gov. Go ahead and search for accounting method. Click on the link, accounting method. Click on publication 538, accounting periods and methods. Then go down and click on inventories. So here it shows us in the inventory section that if you must account for inventory in your business, you must use an accrual method of accounting. However, see exceptions. So let's scroll down and take a look at some of these exceptions. Okay, an exception is 1 million or less in gross receipts. Well, the business that we are reviewing is 1.2 million. But let's keep going. It says here for a qualifying small business taxpayer that the sales can be less than $10 million, and there could be an exception. Okay, so what it is $10 million or less in gross receipts, and the business is not in one of these NAICS codes, something that's in mining activities, manufacturing, wholesale trade, or retail trade, as well as information industries. So we're less than 10 million, and our NAICS code starts with 8.1. So we feel pretty good that we can not worry about actually having to track or do inventories. So we go back to the tax return, and we look at this 300,000 in inventories. And this is where some strategic advice is needed, because they have 400,000 in taxable income. And perhaps we should look deeper into moving this 300,000 of inventories over into purchases and not be tracking inventories as reportable on this tax return. Okay, the next item is other current assets. It goes from 80,000 down to 13,000. That's going to need some type of documentation in the corporate minutes, perhaps a resolution, something that shows the purpose and reason and authorization to sell assets that's not inventory. Loans to shareholders. goes from 20,000 down to 17,000. This is not necessarily a problem. The problem would be that it's not documented and it's not charging, the company's not charging market interest rates. The other associated aspect of this is, let's go back up to page 1 and I'll show you. They have loans to shareholders, but they're not showing any interest income. So the interest income here is 0. Well, how could they have a true arm's length agreement with the shareholder charging interest at market rates but have 0 interest income on the tax return? That's a red flag and just something that needs some good consulting on. Okay, back to Schedule L. Buildings and other depreciable assets. Well, let's say this is one building. It was 200,000, ends 200,000. They didn't take any depreciation on it. Well, this also needs some strategic consulting because the IRS may impute depreciation. So let's say 10 years from now, they sell this building and it only sells for 200,000, but now the IRS imputes depreciation. They didn't take the depreciation along the way, so they didn't get any tax benefit from it. And now let's say that the basis is 80,000. They're going to have to show a $120,000 profit on something that they didn't ever take the depreciation expense and didn't really have any earnings on. All right, let's look at the next thing. It's land. Well, usually if it's real estate, it should have some percentage or appraised value of the land. Typically it's 30% or 20% of the total purchase price of the building. But this return shows 0. So that is a red flag and a concern. Let's go to line 14. Other assets was blank and now is $100,000. So they've purchased other assets. They need some type of authorization or corporate minutes, something that authorizes this operational president or managing member to go in and purchase those assets, because this is not normal business operations. Okay, let's look at accounts payable. It went from 10,000 to 90,000. Not a big red flag, but it is a bit of a concern because it kind of looks like they could be financing long-term assets with short-term loans. So maybe they bought or paid some of that real estate and managed it using their cash flow methods in accounts payable. Also, of course, cash in the bank dropped. Loans from shareholders. Okay, it went from 200,000 to 250,000, so they got $50,000 from shareholders to go ahead and help pay for some of these things. That should be documented and have an agreement, and again, a loan from a shareholder, just like a loan to a shareholder, it should be at market interest rates. Here's another correlating issue. It should have interest expense. But if we go back to page 1, interest expense is 0. This is a red flag because it says that we've got loans from shareholders, but it also shows that we're not paying any interest expense. Now let's go to line 21, other liabilities. It goes from 0 to 200,000. Okay, well that explains more of their cash flow. They borrowed another $200,000, but again, it concerns me that they didn't pay any interest, so maybe they got the loan in December and nothing came due. They also did not break any of it down to less than 1 year. Okay, let's look at line 23, additional paid-in capital. Goes from 440,000 to 60,000. Again, I wonder if they're not taking all this money out because they're getting ready to shut this business down. So they might just need some help to get up and rolling, get some stronger sales, get some growth in. They also need to, of course, document a lot of the things that they've done, and they need to be careful of how some of the things that we have reviewed have been posted. Let's do a quick recap. Okay, as we recap, I just want to note that anything that is not normal operations for a business should have written authorization, either minutes or memos, or something that even just shows the reasoning behind why they did something out of normal business operations. We reviewed a corporate tax return, but most of the things that we looked at would really also apply to 1065 return, which is for partnerships and LLCs. I also recommend that sole proprietorships review their financial statements and their returns in a similar fashion. Okay, well, some of these aspects that are not normal business operations include an address change, including signing a new lease or purchasing real estate. Interest income, red flags that money was lent or invested. So there needs to be some type of an agreement, especially when there is a related party. Compensation of officers. 0 is going to be a red flag on any corporate return, and especially on an S-Corp tax return. Interest expense. Red flags that money was borrowed. Okay, so if it was borrowed from a related party, again, let's have that documented and show that it's being done at market rates. Interest income and interest expense have their correlating aspects of loans from or to shareholders. So document it. Show it on the tax return for its expense or income, and be sure and do it at market rates. Signature. Let's go ahead and verify that the person signing the return has the documented authorization. In 10 years of tax return review, I've never once wanted to get in the middle of a partnership being broken up. So I've always made it a standard to have the tax matters partner be the one that engages with me, and they're the ones that I give the returns to. I do not give the returns to anyone other than the persons signing the tax return and who engage with me. I just don't need that extra drama in my life, and I show them and explain that to them up front in the engagement process. LLC and partnership entities generally allow any partner to sign the tax return. But again, I recommend that they have written authorization for who is the tax matters partner and that person sign the tax return. Just want to go ahead and show a few more things. Increases and decreases in assets, as well as increases and decreases in liabilities. Those need to be documented wherever they are not inventories and outside the normal business operation. Accounts payable for the liability, yeah, I can see that not necessarily needing a corporate resolution or documentation. However, almost everything else along those lines does. Just a quick recap on the tools and resources I used. For the NAICS code, I just did a Google search for Census NAICS. I find that resource to be the most accurate, current, and easiest to use. Also, when it comes to doing some tax research, taxmap.ntis.gov is absolutely fantastic, so please feel free to use that as well. Thank you, I appreciate your time, and I hope that you have found this information to be beneficial.